Grow CFO is where finance leaders grow together. Join thousands of like-minded professionals using Grow CFO to access the combined knowledge and experience of the finance leader community. You can join us today at growcfo.net. Hello and welcome to the Grow CFO Show. Now, we're going to tackle a slightly different topic today. We're going to talk about energy transition from good old-fashioned fossil fuel to sustainable energy sources. And it's an area that needs a huge amount of investment. It's an area that, as a company, you probably need to build business cases about, and the finance team will need to be involved in. So I've found an expert who has written many articles on the transition to new fuels, Nicolas Payen. Nicolas, welcome to the Grow CFO Show.
Thank you very much, Kevin. I'm very thrilled and excited to join the Grow CFO Show and to participate to this event.
You're not a finance person, so tell me a bit about your background.
Okay. Well, my background is more in the energy industry. I spent 15 years in the energy industry, and I have been working at the intersection of finance, technology, and sustainability. I started my career in the energy industry working for a Fortune 500 called Schneider Electric. And I have been groomed in this company for 10 years. And then I became an entrepreneur in developing venture in the renewable energy industry. And my idea has always been, how do we use the latest digital technology, whether it be software, IoT, machine learning, all kind of applications like that, in order to develop new services and products for the energy industry that allow them to progress towards more sustainability. And I've been lucky to be able to do that along my career in big organizations, but also very small startups that I founded myself. So maybe give a bit more detail about a few of this experience. So I started in Schneider Electric. I spent 10 years at both in Sweden, in France, and in Hong Kong. I spent 10 years in Asia in total. But I think the core of my experience in Schneider was being part of the leading team of the internet startup inside Schneider Electric. I don't know if everybody know about Schneider Electric. It's a Fortune 500, is the leader in energy efficiency and energy management and automation. It's a very big company. And at the time, that's this idea for create a new system, a connected system to help consumer to manage their energy at home and to help the grid operator to manage the demand of this electrical home on the network, and didn't exist at all. And they wanted to build innovative technical IoT solution, Internet of Things solution to do that. And they create a small team at the beginning, 5 people. And at the end, it becomes some kind of very big company-wide program with 100 people in order to develop new offer for the US, for the European market, and for the Australian market. Very exciting. The domain was very forward-looking. We were at the edge of the technology at the time.
In a huge company like Schneider, and you're in this kind of internal startup, how much freedom do you get in there? And how much are you governing kind of the rules and the culture of this megalith that you're actually working for?
Yeah, I think it was a very interesting experience because we started as a very small team with a lot of freedom. But as the project gained scale and interest from leadership, and then it became some kind of very big program, transversal program with a bit of a Spanish army, a lot of leadership and not many legs on the ground. And the company had a lot of big attention, a lot of money put behind, but at the end, we suffer for a lot of efficiency, I think due to organizational issue. But we deliver the offer and we really come up with something that didn't exist at the time. You have to realize we developed this offer before the Nest thermostat went on the market, and the Nest thermostat really changed the industry and everybody was in love with it and the utility loved it as well. But it was before. But my conviction was if you have to do innovation project inside big organization, you have to be very careful how you set them up to help them and not to prevent them to be successful. A lot of learning lesson. And I think Schneider has been becoming much better at it after this experience. There was 5 startups at the time doing 5 different startups, one on electrical vehicle, one on energy management for home, and so on and so on. And there has been a lot of learnings for the company.
It's quite ironic in those things in a big company that providing you're not successful, you're kind of allowed to get on and do your own thing. But as soon as you do become successful, you get this great big bureaucracy weighing in on you to take over. Yeah.
Indeed, it's a bit the case. And I think it's always with a lot of good attention. People want to be part of the program, project. They want the project to be successful, but it's not always yielding the desired outcome. And I've become a big fan of the pizza team. I don't know about the pizza team, but best innovation project team to be able to eat out of a pizza. I think this is a very good rules for the early stage of any project or program.
Yeah, keep it small, keep it simple. Yeah. But anyway, you moved on from Schneider.
Yes, I moved to Singapore, where I spent 5 years. And my first assignment in Singapore, I joined a Manumal with a big company in Germany with a supplier in the automotive industry. And they wanted to kickstart their digital transformation around IoT, digital services, software, machine learning. And they had an idea to create an innovation lab in Singapore to do that. And I was tasked to open the lab, recruit a team, and create some roadmap and some first products and services for the company, for their customers. So that would be monitoring equipment for farming equipment or air quality sensor for building, because they do filtration. So everything filtering oil, filtering air, but also help them to modernize their industrial process in some of the manufacturing plants by applying IoT for closer to industry 4.0, for example.
Yeah.
And I did that for some times. And then I became an entrepreneur.
Yeah. Now tell me more about that, because becoming an entrepreneur and finding your own company, that's a big step.
Yeah, I would say I had the desire, I had the energy, I had the strong will, I have some relevant experience. But still, to go from a corporate environment to a startup, it's a very big leap. And you need to unlearn quite a bit at the beginning from just the way you have been working for years in these big companies. And the first company I said was a startup studio. So the idea was to help other companies to innovate, help startup to develop product in a more professional way, and help big company to develop innovation outside of the core business by creating like spin-offs, things like that. And I work on 5 different projects. And after a year, I selected one project that I really believe in it. And I say, I'm going to go full on this one and try to scale it as far as possible. And this project was Positive Energy.
Yeah.
Positive Energy was set up as a climate fintech company to help people who develop renewable energy projects in emerging markets, solar, wind, biomass, hydro, everything that is sustainable, to raise financing or to sell their asset, their project at different stage of the development. And we did that because when we interviewed the company we were developing this project in emerging economy, the financing was always a pain point. well, you need financing. It's difficult.
Because generating assets aren't small. You're talking massive pieces of kit. And we've got wind farms locally with turbines that are 100, 150 feet tall.
Yes.
Great big blades. And one of them costs a lot of money. Never mind a wind farm that's got 20 or 30 of them. All those solar panels cost a huge amount of money. So financing is naturally going to be a problem. This is an asset-rich environment.
Yes, and these projects are big, but they are small in the infrastructure space, because the infrastructure space has been designed to finance dam or oil field or gas power plant. Well, massive project. But this wind project, onshore wind project, or small hydro or solar project can be much smaller, and they will range below 30 million. And for 30 million deals in emerging market, there is no more an investment that's available to do the job. Nobody is interesting to work for. So little chance of success and so little success fees, because that's the way most of the income is done for the financial institution. So our idea was to use digital technology to help investor source and do due diligence on project, and help developer to come with stronger investment file, with good financial model, with complete data room, risk analysis, in order to maximize the chance of finding a deal somewhere. And that was a big dip for me into the financial world, because I need to understand project finance, and early investment in various project type with different revenue model, with different structuring, and understand all this landscape. Happily, I had a great partner on board who was coming from the financing world, from the oil and gas, and who had a lot of experience. And so we were really able to develop a state-of-the-art platform and do that.
Yeah.
So I don't want to go too loud.
So that sounds great. So that's putting you in a very knowledgeable position to go on and tell us what we wanted to cover today, which is talking about that general state of the energy transition with decarbonization.
Well, I'm passionate about what I read every day. I can imagine a lot of people who are listening to the podcast are not that close to the topic. And so I wanted also to take this opportunity to give a chance to your listener to get an idea of what is happening in the world and what is the scale of this transition. Because I think a lot of the time people don't realize.
All the news tells us is we're going to miss the targets. It always tells us what we're not going to do, not what's actually going on. So what I'd really like to learn today is what is actually going on.
Yeah. So I think what you will see is that we are going faster and faster. And I think there is a lot of things happening to reach the target. Even maybe the conclusion is we are still too short, but that will be after. So if you look about at the US, and I think the US has been maybe the late major player to get really active into this topic, but now is really accelerating tremendously.
Even though Donald Trump managed to withdraw from various agreements for a while?
Yes, even with this, I think, especially what has happened with the IRA has really been transformative for the US economy in terms of investment in the energy.
What's the IRA?
The Inflation Reduction Act. So it's a set of policies that has been put in place in the US to incentive company to invest in new production facility for clean technology and to reduce clean energy technology price or clean technology prices and increase their market penetration. So the US has been very pragmatic. They say we need more EV, we need more solar panel, we need more wind farm, we need more batteries, we need more green hydrogen. So we are going to subsidize the manufacturing of this product on the US ground. And they have put a lot of money behind. And the result has been outstanding. So there is already today 280 projects associated with the IRA in the 44 different states in the US. So it's really US-wide. And the total investment associated with the 200 projects is $282 billion. That's a massive investment.
It's a massive investment. Yeah.
Almost one third, $110 billion is going to clean technology manufacturing. So it's really manufacturing of products and hardware solutions that will be deployed on the ground. The majority is going for electrical vehicle for sure, 75%, but you have still 10% that are going for localization of solar production and 10% for the ramp up of the battery manufacturing. And battery manufacturing is even bigger than that. I think there's 43 billion will be spent in battery manufacturing and recycling in the US alone that are already committed as big. So that's the impact of the IRA. They're also very busy with the deployment of renewables in order to provide the clean energy that they need. So last year was the highest year in terms of solar installation across the US with 31 gigawatts. Wind has been in trouble. We will discuss it a bit more later. I think the wind project tend to be much bigger and a bit more complex in terms of supply chain. And so they had an environment that was a bit more negative due to the interest rate hikes and the supply chain disruption following COVID. The EV growth is also quite impressive in the US. That 1.2 million EV has been sold in the US last year. That represents 8% of the vehicles sold. And of course, the US is a hunter of Tesla with maybe the flagship US clean tech company. And Tesla has sold 2 million EV vehicles worldwide last year. And it's really showing the leadership role that the US want to play in the energy.
How does that compare to vehicle sales of those manufactured in Asia? Because we also see a lot of vehicles coming in from the Far East.
Yeah, so we can talk about China a bit more, but China, I think, produced almost 10 million electrical vehicles in 2023.
So they are using
5 times more than Tesla, but Tesla produce also EV in China, so they are part of this number. Almost 36% of the car manufactured in China are electrical vehicles.
Wow.
And 1 car out of 4 sold in China is an electrical vehicle. That's the highest penetration.
Maybe we come back
to the major market.
Yeah, maybe we come back and talk about China in a little while, but that's the US. What's happening in the UK and EU?
In EU. Yeah, the UK, I don't know too much and I don't want to go too much into detail. I know a lot of things is happening in the UK, but the EU, I think, historically has always been an economic group that was really trying to push the climate agenda. And I think the way the EU approaches things is a bit different than the US. They want to create a low carbon economy. And so they try to create a set of policy framework that will really transform the whole economy into a low carbon economy. And they have done several things to do that. As they have done the renewable energy directive and the Repower EU directive, would try to increase the share of renewable energy into the energy mix of Europe with an ambitious target of 45% of all energy being consumed in Europe should come from renewable sources. And that's for 2030. It's a very short time span. No? It's in 6 years. And they also have the most sophisticated compliance carbon market with the ETS mechanism. And they have stopped the allowance of new permit. So the price of carbon should increase over time. There is more demand and less permit to emit available. They also have created a carbon border adjustment mechanism with a way to tax product with a high carbon footprint that wants to come into Europe. It's a way to encourage people to localize production, or if they produce outside of EU, they should do it with the same or even lower carbon emission than they would do in the EU. And they also have part of numerous legislation to reinforce, I would say, the way financial institutions manage their assets and make sure that they can label green and sustainable assets in a much better way. And so Europe created the EU taxonomy with rule books to define what is green and sustainable or not. And I think this was very welcome. It was the first of its kind. And they have also developed a set of regulations to help asset manager or fund or banks to classify their product in a better way that consumer can better understand what kind of investment product they invest in, and they don't feel greenwash or lured into investing something that looks green, but when you scratch the surface, it's absolutely not green. So all this is happening at the same time. It's really impressive, the machine being rolled out in Europe in terms of regulation. But that also translates into investment. And there is some also outstanding number in Europe. There was 2 million EVs sold in Europe in 2023. It's a 20% growth. So it's more than in the US. 8% of these vehicles sold in Europe, unfortunately, are coming from Asia. So there is a lot of discussion on how do we ensure fairness in competition. In 2023, 56 gigawatts of solar were deployed in EU. That's the highest number ever. It was a 40% growth compared to 2022. It was really the impact of the war in Ukraine with a radical increase in gas prices. Everybody has been running to decarbonize and deploy heat pump, solar panel, wind turbine, energy storage. And this number has been going through the roof. 7 gigawatts of wind a bit less than solar for the same reason I explained in the US. So it shows the work. And I think for me, the automotive industry is really the most impressive transformation. I think the automotive industry is one of the biggest job provider in EU. It's one of the biggest contributor in the trade balance of the EU. And so it's very important. And all the European OEM have committed to invest up to, in total, 250 billion euros to move toward the electrical vehicle. 250 billion.
That's
the amount of investment.
A lot of money. But we touched on China earlier. Now, there's a little part of me that I keep hearing as well from the co-host on my other podcast, The Next 100 Days, Graham, who has a Tesla because he likes them, but doesn't really prescribe the sustainability agenda. And we'll always say, well, I'll take notice of sustainability, Kevin, when China stopped building coal-fired power stations. Now, You do hear on the news of things like that in China, in India. Now, what's really going on in China and India? Is that the case? It's surely a country that's producing so many electric vehicles and so on. Can't be that bad.
Yeah, so I think there is always this, what you hear about China is that, oh, they are the biggest coal consumer in the world and they have so many coal power plants. And that's true because they have been going through this economic development so fast in the last 2 or 3 decades. They were power hungry and they used what was available and cost effective at the time. But people forget that at the same time, the Chinese government put in place a fantastic multi-year program in order to scale up alternative solutions. And they have been developing industry around solar, wind, nuclear, hydro, batteries. And this industry are now leading in the world. So I want to give some number here, just to put in perspective with the other area that people understand. So in 2023, China added 217 gigawatt of solar and 76 gigawatt of wind. China alone represents half of the addition of renewable energy in the world. Half.
Fine, but huge country, it also has the biggest population. So you'd expect a small investment, it should still look massive. How big is that?
Yeah, but it's not. Yeah, okay, that's fair. Let's keep going down on the number and then we'll see how it's massive. They added 50 gigawatt hour of energy storage. That's a times 3, times 4 compared to before. China is the largest producer and exporter of solar technology in the world, and solar represents 75% of global renewable energy addition. So just to say there is no energy transition happening in the world right now without China. We would be unable to do it. They don't only do wind and solar, they do also nuclear. They have 55 reactors running. They announced 4 more, and they have a plan to go to 80. Their plan is to generate 10% of their energy from nuclear in 2030, if I'm correct. And that shows that the energy mix of China is drastically changing. And they go much faster than the target they have put on themselves before. So to give you an idea, next year, 2024, this year, 2024, China will have achieved their target in terms of deployment of solar and wind that they have put for themselves for 2030, 6 years in advance. That's a massive. And then they will publish a new target that will be outstanding. Yeah. And it is becoming really an important part of the Chinese economy. As the investment of the China into the energy transition economy, the whole industry, the manufacturing plants, the infrastructure and so on, it's almost $900 billion. There is a study where we look at what is the impact of the investment in the energy transition on the Chinese economy. Last year, China did 5.2% growth of GDP. Without the investment in the energy transition, China would have been 2%. So in fact, China, with the real estate sector that is really struggling, is trying to find new vector to grow its economy and is betting massively on the energy transition. They see it as a way to grow their industry, to reduce their dependency on fossil fuel, to reduce their fuel import costs, because China is a net importer of fossil fuel. And so they see it as a way to increase the strength of their economy, and they do that very good. Just to give you an idea, the amount of money invested in China in the energy transition in 2023 is equivalent to the worldwide investment in fossil fuel in 2023. So people can challenge and say, yeah, they are not there yet, but I don't think it's fair to say that China is not doing its part. I think China has been doing its parts in 2023. And we hope they will do much more moving forward because, as you say, they need to catch up. They need to phase out coal much more aggressively in order to reduce their emission.
So it's a very exciting but a challenging time.
Yeah. So that's all the positive news I could give you. If you look a bit more, there's so many things happening, so many ramp up on the manufacturing side, so many more EV on the road, heat pumps, solar panel. Everything looks good, but we are still at the early stage of the energy transition. I always have been fond of innovation. I read a lot of books about innovation, and there's this book called Crossing the Chasm from Geoffrey Moore, who explain how an innovation needs to go from early innovator to early adopter to early majority to gain scale. And it defines this percentage of penetration of the market between 10 and 2%, 12%. It's a chance where an innovation, a transformation will be successful and grow and become dominant or may fall. And for me, I think the energy transition is at this level. 16% of cars sold in the world are EV. It's massive, but it's only 16%. That means all the rest are not EVs. And the electricity, the energy we consume, still 80% is coming from fossil fuel. Only less than 20, to almost 20% is coming from renewable sources. So we still need to ramp up this much more aggressively. So we are in this phase where we need to scale this industry, but they also need to get market share, further market adoption. And you need to convince more and more people that it is the way to go. And that's a key time in the energy transition. I call it the money time. I don't know if you like sport. I love sport.
Okay, we're getting to the bit that our finance audience like. I do like that phrase, money time. Tell me more.
Well, I think a lot of people who are CFO understand if you have a company who has to move from an old activity to a new activities, or we need to invest in a new activity that is growing, that you want to grow aggressively, you have this moment in time where things are really on the edge, because maybe you have to phase out an old business with very profitable, doing a lot of money, and invest in a business that is not doing a lot of money and as successful today. Or you have to invest aggressively in something where there is no yet guarantee of success. And I think that's what we see now. If you look at the different actors in our world. So for example, take the legacy player, the oil and gas player, the coal players. They start to see their market falling apart. They see the demand destruction. And so they start to feel the pain of the energy transition. Their valuation is low because investors don't see long horizon for their revenue streams. But there's these very profitable, very healthy activities that generate a lot of cash. And what should they do? And for them, it's a very difficult situation to manage. And I think in the last years, they never really feel the pain, because when you have 5% of the energy is coming from renewable, you don't see it. When you have 5% of vehicles sold by EV, you don't see it. But when it becomes 30, 40%, it becomes visible in your P&L. And that's a big impact. So that's money time for them, because now they need to decide how to manage that and what is the road they have to pick. At the same time, you have the clean energy player or the clean energy branch of the legacy player. Here, you are facing the real competition. It's the market of tomorrow. It's the biggest market opportunity of the century. People want to be part of it. They want to win in this future market. So they need to invest a lot of money. But everybody will not win. So there will be a lot of companies who will invest, who will not make it. And the company who will make it will earn a lot of money. That's for sure. And so you have to balance this. And it's also a very different exercise. Why Tesla has been so successful, you can mention it. The commitment, the risk that has been taken for this company in terms of building the giant factories without it having any guarantee of being able to solve the car. That's a real commitment to in terms of business and financial decision. So that's also money time for them. It's also money time for the government, because the government is squeezed. He wants his green products to grow and scale, but they are not yet fully competitive. So they still require subsidies. It costs more and more money because the volume increase, but they also start to see the revenue from legacy products, fossil fuel, falling. And so for now, it's a lot of cash out for government in subsidies, in best lower revenues, in supporting manufacturing. So also money time for governments. And that's an obvious group. But I think maybe a lot of your listeners are not part of the energy industry. And then they say, yeah, but well, it's okay. I don't need to look into this. But I think you cannot, because maybe your product category or service category is not directly impacted, but it may impact your supplier upstream, it may imply your customer downstream. And so the whole economy in this movement start to need to transform and need to adopt more sustainable practices. And if you don't do it at sea, there's always a decision. When is the right time? A lot of companies will ask, when is the right time to electrify? Should I wait for cheaper technology? Should I wait for more efficient? And it's also money time to make the right decision, because if you do it too late, you may have already lose your edge compared to your competition. And if you make it too early, then it could be costly as well. It could be a mistake.
Yeah.
And so in all these elements,
you look back at history of innovations into new technology, and quite often the company that comes along with the first product in that new field isn't necessarily the one that succeeds. And take one example, videotape. Okay, something that's obsolete now, but the first video players, the Betamax.
Yes.
VHS wiped them out. That's sort of that example. You can probably come up yourself with 10 or 15 more where the first product to market is brilliant, wiped out by the second product or the third product to market.
Yeah. So I think it's absolutely right. Being the first doesn't guarantee your success at all. Yeah. I think there is even like a famous book which say better to be the fast follower than the one who is clearing the ground. But if you want to win, you have to participate. And due to the scale and due to the nature of this technology, just being part of the game is costly for every company. You cannot go there with small intention and small investment. And so that's why I think the CFO play a key role, because
I was going to say
you will have to manage. What
is the role of the CFO?
Conflicting.
What's the CFO got to do in this piece?
Well, I think that you want the CFO to enable the strategy of the company, but you also want the CFO to make sure that the company has a proper understanding of the financial implication of the strategy. And so many instances in the market you're going to serve, there's things that are very similar to the previous world before the energy transition. But with the energy transition, there is so much more things coming into play that may impact the financial performance of the company. What will make your product successful on the market? What is the external element that will be part of this success criteria? How much can you invest to support this growth? And what we have seen in the last year, a lot of companies who invest heavily are never able to return cash to shareholders because the growth is there. And so you keep investing. But it becomes at one point a problem, especially if the valuation doesn't support anymore this trend. And I think that's what we have seen recently with the increased interest rate. The valuation of this company, who doesn't provide money back to the shareholder, have been hammered more than others. And that it created an imperative for this company to not only go for growth, but also go for profitable growth. And we have seen this change happening recently as well.
So that interest rate one's an interesting one, because in real terms, what's happened is that interest rates, people are complaining because they're so much higher. But if you take a long view, interest rates have really bounced back to historically the sort of levels they've always been after a period of really unusually low rates. So that's an interesting little one to consider. That increase in interest rates is spoiling returns to shareholders.
Well, for the last decade or more, interest has been falling down and has been low. So there was two implications. The first implication is if as a company you return 2 or 3% to shareholder, it's much more than what they can get from financial markets, so they're happy with it. And the risk premium is good and they are fine. And the second effect is, I can have a good leverage. I can leverage my business quite a lot at lower cost. And so the cost of growth is relatively low. But when interest rate increase, then suddenly shareholder want a higher reward for the risk associated with investment. And to finance the growth or the investments, debt financing is much more expensive. And so financing the growth is also more expensive. This is really the two situations that concern the clean technology, because clean technology are CapEx intensive, so they require a lot of debt financing historically. Project in Europe for a clean energy project at 95% leverage. You can imagine for your financing costs, it's completely different. And they were also, investor was okay with a very low yield from this company because they were growing. And the perspective of growth was just a fair compensation for the lower return. But the interest rate have really changed this. But I think it has also some very positive effect because a lot of these companies have decided to restructure themselves and to work in a more, I would say, sustainable growth financially with better cost control, healthy margin. And we have seen that if you look at, for example, the big European player of the wind industry, they are going out of this phase. They've been restructuring themselves to deliver positive result again, same in the US. And so it's really the next stage before you go to the early majority, the next part of the scaling of the market. You need to get your unit economic rights to make sure that when you scale your operation, you are not jeopardizing the health of the company. And that's what is happening now. It's very interesting phase, I would say, for CFO and people who support the company in their growth journey and investment journey.
So you gave me some pointers before we started recording. So CFOs educating, telling team members what's happening, investigating, understand what energy transition means for your company, arbitrate, which we can see as a key one, capital allocation.
Yes, I think that's typically they play a key role. You know, there's so many projects going on in company. You have to invest money. I think you should always look, is this investment going along the decarbonization or the energy transition journey? And here the CFO should be a real gatekeeper to make sure that every investment done is future proof and so aligned with the energy transition and the decarbonization agenda of the company.
And in a very fast moving, changing area, keep learning about what's going on.
Yes.
Because what's true won't be true tomorrow. There'll be something else going on.
I think that's really the most exciting part around these activities. And it's a bit like maybe other edge technology like artificial intelligence. The reality of 2 years ago is not the reality of today. I will give you an example. For example, battery technology is a cornerstone of the energy transition. The price of batteries have been divided by 3 in 3 years.
Wow.
There was a big pack after COVID because of supply chain and growth impact, but it has been divided by 3 in 3 years. And we have reached level now around 60 euro per megawatt hour. That was forecasted 3 years ago for 2030. And so that really shows that it's very difficult to know what will be the numbers in 3 years' time. And so your plan needs to be continuously refreshed
and
with the latest market input. It's a very fast cycle, and a lot of industry are not used to this fast cycle.
And I think that's a key message coming through to CFOs. We've talked a lot about it in other areas. Planning, strategy, the traditional idea that you have a 3-year or a 5-year plan that you're putting together. I feel for all sorts of reasons in all sorts of areas that you have to be much more nimble than that. And planning in any detail for more than 12 months at the moment is probably not a great idea. Yeah, have an idea where you 3 to 5 years.
I think I listened to the episode you referred to. I love the discussion because I think it's really, you need to have a long-term plan for your strategy. But as I say, you need to have this really frequent refresh on your numbers.
You've got to be
the markets are moving so fast.
Yes. So
last thing, maybe communicate. For CFO, it's not always the function of the CFOs, but because they will be involved in all major capital allocation decision or arbitration, it's also important for them to explain how decisions are being taken, what are the criteria for decision, and how elements associated with the energy transition and decarbonization are becoming pervasive to the financial decision. And a lot of companies now have sustainability reporting, and there is more and more, I will say, correlation between the sustainability performance and the financial performance of company. Because on the asset manager side, on financial institution side, more and more there is a mandate to look at both and to make arbitration based on both sides.
And just in closing, Nicolas, you gave me some interesting statistics about Generation Z, as the Americans like to call it, Generation Z, as I would prefer to call it. 70% are more likely to work for a company with a strong green footprint. 86% of young talent prefer to support or work with companies that care about the same issues they do. 30% have left a business due to its lack of a corporate sustainability agenda. So, for no more reason than that, ignore this at your peril.
If you talk to a lot of executives, one of the biggest headaches they have, they will talk about recruiting talent and keeping talent. And after, they will talk about artificial intelligence as a way to automate and try to have less problem when related to workforce and workforces and resource availability. But they also need to understand that the energy transition is a fantastic tool to recruit and retain talent. And for the young generation, it's a very good news. I think more and more they are aware of the global issues, and working in a company that contribute positively with these big issues is an important item for them. And so it's become important for every company.
Yeah. Nicolas, thank you for giving us such a comprehensive update on where we are with the transition, and for showing us where, as finance leaders, we need to be playing a bigger role. Thank you for being this week's guest on the Grow CFO Show.
Thank you very much, Kevin, for the opportunity, and I hope the listener will get some interesting insight out of this discussion. Thank you.